And still staying in the oil space, the Chief Executive Officer of the Nigerian Midstream and Downstream Petroleum Regulatory Authority, Mr. Farouk Ahmed, says that local production of premium motor spirit, that's PMS petrol, is displacing importation of the product into the country, sharing this information with members of the press. He is saying he's also looking at the potentials and the consequences that this could have on the economy. That's what we're going to be discussing with oil and gas experts. Dr. Wisdom Enang joins us virtually now. Dr. Enang, good afternoon and welcome to the program. I guess this should be a pleasant news to Nigerians, the fact that the import of PMS has plunged.
Absolutely. It's a fantastic one. And very much so. If you look at the consumption, I mean, Nigeria consumes between 40 million liters per day to about 60 million liters per day. And we've been able, as a country, to achieve production increase from what it used to be at 3 million liters per day in September 2024 to about 24 million liters per day in Petrol 2025. So that's a good one. And similarly, we also have importation drop from about 45 million liters per day in August 2024 to about 15 million liters per day in April 2025. So that's a good thing. The much of that is being attributed to the local refineries, very good. But the central theme that underpins the ability of local refineries to produce and produce more so in a very effective and efficient way is the Crude for Naira deal, which I believe we will delve into much earlier. But that's a very good news for consumers and for everybody.
Yeah, well, we might as well go there to the Crude for Naira and the issue of pricing in the midst of the decline that we see in the global space of crude. How do all of this meet up? Because being a deregulated environment, Nigerians would expect that prices will drop as it declines in the global space. And now there should be less pressure on FX because Crude for Naira is back.
Absolutely. Right. So when we talk about, the entire PMS market, two cardinal things come out: the PMS supply and the pricing is really important. And both of them have the ability to affect both because they're quite interconnected. So yes, the Crude for Naira deal was kind of a common denominator between all the refineries and the economic realities of Nigeria. In fact, it brought PMS prices to as low as 860. But what happened when it was temporarily paused? That showed us the effects that the Crude for Naira deal had on the economy, the crucial effect, because once it was paused, we had fuel go from 862 to about 930, and then the exchange rate went from about 1,545 to about 1,600, which of course underpins the fact that supplying this crude to the national refineries in the local currency is very much cardinal to boosting their production. So what are we going to be expecting based on what we currently have? Yes, increased supply at the Naira prices are going to help to engender our production. But when I say increased supply, it means that we need to meet or exceed the quota. Remember, Eni, that we've had a challenge where much of the quota that was given, I think it's about 450,000 barrels per day crude allocation to the local refineries, wasn't actually met by the NNPCL. So getting adequate adequate supply would mean that we would be able to get this quota achieved. Now, when we talk about pricing, the pricing is a function of, yes, the crude in the international market, that's one component, and the Naira exchange rate, that is another component. And when you look at our exchange rate, hopefully now the Crude for Naira deal is back, we should get it appreciating. So the fuel prices should really settle back to about 870, 880 Naira that we're having at the retail pumps. But on the overall, what I do expect is that we'll have stable supply. And then as the exchange rate detects, we will be able to have very reasonable benefits in pricing.
All right, Dr. Enang, help us to understand the workings of the Crude for Naira, at least from your perspective. I've seen some people say that it's a form of subsidy. Is there any element of subsidy in the crude for naira policy?
No, it's not a form of subsidy. I would not call it that. Because when you talk about subsidy, people think about consumption. But from a production standpoint, it's just to say, look, we've got some realities, we've got some markets, realities where if you stepped out right now and went to your bank and said, I wanted to get some FX, you might not get it quickly enough, and you might resort to the, black market to get your FX. And what that means is that if you get FX to import your crude, then it would worsen the FX, prices, and then it will also mean that the crude that will end up with is going to be expensive. So the government has said, look, go and you'll be able to take up the crude and then pay in naira. So it's just like a middle ground, not a subsidy, but sort of a support, an incentive, or maybe a sort of a cushion looking at the realities that we have in country today to say, look, let's not allow them to go and destabilize or skew the FX market, primarily because they'll be going to the black market to get it, and that will skew all of the gains that we've made in the FX market. Let's take it back and allow them to come in, get in naira, and then the government will find out the best way to go in through the path of least resistance and be able to get all of that naira sorted out, and in terms of an exchange rate. Now, the only concern I have, and I'd like to warn, is that the Crude for Naira deal does come with some opportunity cost. The opportunity cost is this. The question is, what would Nigeria have gained if Nigeria had sold the crude and gotten dollars? Remember, we have some obligations. We have the international debt is one, the crude back loans is another. We have some of our budgetary funding requirements that are benchmarked against our earnings in dollars. And what that means is that we are going to be losing that money by earning in naira. But that's not a problem. It is now down to the regulators working in tandem with the NMPCL to boost to come up with initiatives with the new management of the NMPCL to boost our oil, earnings, FX earnings for oil. And what that means is we have to explore opportunities to increase our production. We need to explore new frontiers. We need to enhance recoveries from the existing, assets and reservoirs. We also need to curb oil theft. Those are some of the initiatives that we need to put quickly on the table to be able to ensure that we cushion the opportunity cost effects of the Crude for Naira deal. The other thing is the need for the CBN to work hand in hand with the Ministry of Finance to be able to come up with a way to boost non-oil exports. Ultimately, what we need to do as a country is to earn more FX. And if we can do that with the non-oil exports, fantastic. If we can do that by boosting our production, fantastic. But ultimately, we need to look at the benefits of the Crude for Naira deal vis-a-vis with the realities that it comes with a contraindication, which is the side effects of it, and we need to prepare on an ample level how we can cushion the effect of that side effects.
Yeah, well, we have to, and I think there's also that need, as you noted, to increase our production. Unfortunately, we see our last production was down, it dropped. But hopefully, we'll be able to recover and do even much more. Thank you so much, Dr. Wisdom, and oil and gas experts, for your perspective this afternoon.
Thank you very much, Jeannie. Do enjoy the rest of your day.
You too.